Welcome back to Talk Property to Me. My name is Brad East.
I'm Aaron Downey, and today we're discussing the rental market across Australia in 2025.
So there's been some interesting data come through recently that shows evidence that the rental property market is actually starting to decline. So it's actually becoming a bit more affordable, which is great news for renters. I think realistically those numbers are probably just stabilising or starting to correct from the, I don't know if you want to call it gouging that was happening during COVID, but it was kind of a bit of gouging happening during COVID.
I think the rental market decreasing it's just great for Australians overall because it's going to bring that service inflation down as well.
100%, which then flows on to interest rates and affordability. So yeah, it's good signs that rental market is starting to decline. So we'll get straight into it. You've got some numbers that you want to run through and some suburbs.
Yeah, just with the rental market, obviously, like Brad said, we saw that price gouging and just that surge because of border closures and COVID-19 and different migration shifts. But it was a really irregular period in the rental market, and that's why we saw that such aggressive growth. But like you said, Brad, the market is starting to stabilise, and in September 2024, there was a PropTrack report, and that's why we said it's starting to plateau, or at least probably further decline from where we are in this report. And Sydney, for example, 23 out of 34 LGAs saw renters paying below advertised rents.
Yeah. So we wind back to that 2020. I remember 2020. In that first initial part of COVID, getting a rental property was really easy because everyone was in lockdown, and then it sort of they created you couldn't leave certain areas and do all this certain shit. Yeah. So then all of a sudden people wanted to move to these nicer areas, and that just created this flood of people needing new rentals.
Businesses allowing work from home, and
all of a sudden people could move to Newcastle to work from home or wherever they needed to be instead of being at in Sydney. So it just created a huge surge of demand.
Yeah, and a lot of people didn't know what was going to happen with the property market, so that a lot of people weren't buying, but also a lot of people weren't selling. So for the people who were buying, there was extreme competition because there was no sales available.
Yeah, exactly. You couldn't buy either.
So
first home buyers were priced out of the market. It was nuts.
Yeah.
So and then in 2023, 24, it did start to slow down. It wasn't, I guess, going backwards like it is now, but it did start to slow down. In 2025, now we have data showing that renters are actually paying less.
Yeah, and that's the thing. We said, September, this is when that report was released, but there would have been a lot more LGAs join that report, and I think those 23 out of 34 LGAs in Sydney, it's probably closer to that 30 out of 34.
Yeah.
But for that Sydney market, really you're looking at, we've got some suburbs here. So there's still a lot of competition around Strathfield, Parramatta and Bayside. But overall for the Central Coast, Hawkesbury, the Hills, the Northern Beaches, Ku-ring-gai, Sutherland, Campbelltown, all of those markets have decreased significantly.
Yeah, that's good. And then, where do we go? So if you look at some of the capitals as well, so it looks like Brisbane have negotiated lower rentals across all LGAs.
Yeah, Brisbane is down across the board and more so in the city and then that Locker Valley areas.
Yeah.
But it is, you're talking about a 5 to 7% decrease in rents in those areas.
So and what that decrease means is it rented out less than what it was originally advertised at.
Correct.
And that's what the data is.
And that's the thing. It still might not have decreased overall.
Yeah.
It's decreased from vendors' expectations.
They didn't get what they wanted.
And I know personally that a lot of investors are pushing their property managers to say, hey, just stick an extra $50 on it to see if we can get it, because they still need those yields because of interest rates at the moment.
Yeah.
So it is just the advertised price. I still think it's a balanced market and it's priced well, but it's a decrease, like Brad said, from the advertised price because of high expectations.
Yeah, 100%. And first first home buyers are now able to buy again. So that's easing off the demand in the rental market as well.
Yeah. But if we cover all states, like we said, 23 out of 34 of LGAs in Sydney, I think that would be down to roughly 30 out of the 34 now. Brisbane, every single LGA is negotiating lower rents. 2/3 of Melbourne, likely a little bit more now. And that's all we've got. We actually didn't put any data in here for the Perth market, did we?
No, I'd say that's probably still going strong. But the Sydney just got some recent data as of today. So Woollahra is topping the largest rental drop across Sydney with a weekly decrease of up to $150 a week.
As a percentage, that's probably not too significant because Woollahra, you're probably talking about median rents of $1,500 or $1,900, something like that.
Actually, you got North Balgowlah.
North Balgowlah.
So median rent drops of $200 a week.
It's pretty significant.
Yeah, Fairfield, Lane Cove, Woollahra again, 9% lower than asking prices. So these are all pretty big drops.
Yeah.
Melbourne, we've got McLeod with a 27.3% decline from asking price over
crazy.
a 12-month period. It's huge. Inner South and Inner Melbourne, it's a mild drop of about 1.8%.
Yeah.
Adelaide is sitting on average in Findon, don't know where that is, but averaging around $65 less than listed over the last quarter.
Yeah.
So predictions going forward, I think we're going to continue to see this in 2025, likely 2026 as well.
Yeah.
And that's just, it's like anything. When the demand is there, you can draw those prices out as much as you want, and you really capitalize on that. When that demand pulls back, you're going to have to drop your prices again, and that's that elastic band sort of model.
And that's why it's important to know that it is just the advertised price, because it's the same as vendor discounting on the sales side. Vendor discounting might be at 5%, but it's from 5% from the advertised or vendor's expectations.
Correct. Or what they wanted originally.
Correct. It's not, it's not that example of McLeod. It's not 27% of the market price as a discount. It's 27% of the expectations.
Yeah. Yeah, which is, it's going to take a little bit. I know that it was very similar. Obviously, I talk to a lot of real estate agents and even selling prices at the moment. Still, vendors are expecting a lot more than that they're going to get.
Yeah, yeah.
And that's something that's going to take a couple of years for people to sort of come back down to earth with their expectations of, we're not in COVID anymore.
Yeah.
You're not going to get those prices anymore.
And that's the thing, like, we're still in a pretty tough position in the market overall, especially compared to those, 2020, 2021 times. The interest rates are still high regardless if we've got rates coming down. Even in strong markets in Sydney and strong markets in Newcastle, all of these growing markets, Newcastle did 5% in some good suburbs this year, but 5% for Newcastle is technically a contracting market. It's not a growing market.
Yeah.
So there's not a lot of demand there. It's just naturally growing in its normal balanced cycle. And until we start to see more people into the market, we will just see those vendors' expectations still remain too high.
For sure. So final thoughts here. I think if you are renting at the moment, your lease is coming up soon, for renewal, I'd be negotiating.
Yeah.
100%. You are in a position now, rental prices are starting to drop.
Yeah.
I think you're in a good position to be able to ask for a better price.
Yeah. And that's the thing, especially if you're a long-term tenant with a good track record. A lot of owners and property managers don't want to try and release a home.
No, it costs a lot.
It costs to do so, and there could be a vacancy period, even of a week. You're talking, if you're getting $700 per week, take that $700 and divide it by 52. You're taking a hit overall. So,
but you also, it's unlikely to be vacant for a week. It's going to be 2, 3. Easy. Sometime a month.
Yeah.
Sorry, it's easy for them to just lower the price and keep a good tenant.
Yeah.
So I would 100% be starting to negotiate. Go to them with data too. Don't just say, this is what I want.
Yeah.
Do some research. Have a look on real estate and Domain. what's renting in that area for a similar sort of size or bedroom or location, and go back to them with that data and say there's prices out there that are $100 less.
The thing is, like everything, and especially sales, the rental market's it's property specific. It's not just across the board. Because I purchased property recently in New Lambton Heights where all the property managers quoted 800 to 880, and we got a family who moved from overseas paying 950. So there is still rental demand there. And it'll always remain for good properties in high demand, same as sales. But for just the average property, you're definitely in a position to renegotiate your rent.
100%. So finally, if there's any property managers that want to jump on the show and discuss this in detail and see what, have a chat about what they're seeing in the market, reach out, send us an email or a message, and we'd love to have you on the show.
Yeah.
But until next time, we'll see everyone next week.
See you on the next one.